In this video, I'm going to be showing you guys the exact strategy that took me from an unprofitable trader to a profitable trader. For 2+ years, I was a struggling trader. I was blowing accounts. I was just losing money constantly. But whenever I found this strategy, it really clicked for me, and that's when I started getting payouts. And I live trade with the team. I've seen people use this strategy and actually make money with it. And this is the exact strategy I used that made me $10,000 in the month of January. And this is the exact strategy that's probably going to be making me $100,000 this year. And like I said, I've seen people come into my group where they did not use a strategy. They were unprofitable. They implemented this strategy by watching me live trade and started receiving payouts. First things first, I'm going to make this video as simple as I can. And if you guys want to see me use this strategy every single day trading live, or if you guys want to just get more information, make sure you join my group. Click the link in the description or click the link in my bio. But let's just get right into it. The strategy that I use is called supply and demand. Supply and demand, you might have heard of it, you might have not. But basically, like I said, I'm going to make this as simple as I can. So from supply levels, you are going to want to sell from. So we're going to put sell just like this. And then from demand levels, you're going to buy from. Supply, sell, demand, buy. Now the candle you're going to have to be looking out for is called the previous contrary candle. Okay, so I'm just starting off by naming a few things we're going to be talking about, and then I'm actually going to be showing you guys. So previous contrary candle. That's going to be that main candle that we're looking for, because supply and demand levels we mark out. Now, a lot of people mark these levels out by using the rectangle. That is not how we're going to be marking this out. I mark my supply and demand levels out by using lines like this. So previous contrary candles, the candle we're going to be looking for, supply we sell from, demand we buy from, and the strategy is called supply and demand. And then one other thing I'm going to be talking about that we'll get into is previous session highs and lows. That's going to be important as well. Now, the main difference too with my strategy is I do this on multiple time frames, right? So the supply and demand we are going to find on multiple time frames, and we need them in confluence. So more time frames in confluence, the better, right? The higher probability. Let me just put that. Higher probability. I'm not the best typer. This might seem confusing right now, but we're about to dive into it. So starting off with the previous contrary candle, right? And then we're going to dive into this stuff. The previous contrary candle is how you find your levels of supply and levels of demand. Previous contrary candle for a level of supply is going to be this right here. Now my candlestick colors are blue and black. As you can see, the blue ones are bullish, black ones are bearish. Now for supply, remember I said we sell from there. So for supply, you're going to want to find the last bullish candle before the move down. So our previous contrary candle would be this candle right here. This is that last bullish candle before the move down. Now for demand, you're going to be looking for the last bearish candle before the push up. So for an example, you could mark this one as your level of demand, because this right here is the last bearish candle before the push up. Make sense? So let me go ahead and write that down for you guys so you guys know. For supply, you are going to mark out the last bullish candle before the move down. Look at this. My typing skills are not the best, but that's exactly what we're doing. For supply, you're going to mark out the last bullish candle before the move down. And for demand, we're going to put this. For demand, you are marking the last bearish candle before the move up. For demand, you're marking the last bearish candle before the move up. So now we know that, right? So let me go back to the charts And we know this is that previous contrary candle, and we are talking about a level of supply in this example. So now we're going to get into marking the level of supply and level of demand. So when it comes to marking, remember how I said most people mark it out with a rectangle just like this? They will go from the top of the candle to the bottom, and that will be their level of supply or level of demand. But I do not mark out my level of supply or level of demand like this. The way I mark it out is with a line. So I'm going to go here, and for supply, I'm marking the lowest point possible, just like this, right? So you can see I marked the lowest point possible of this candle. So see this wick right here? We mark that. It does not have to be just the body. It just needs to be the lowest point possible. Now, see how I'm on the M1 time frame right now? This is my level of supply on the M1 time frame. So this would be an M1 supply. So I'm going to go ahead and mark M1. Now this right here is a custom template I made. I will go ahead and show you guys that at the end of this video. But this is an M1 level of supply. Now I'm going to go to the M5 time frame, because remember, multiple time frames in confluence is key with this strategy. The more time frames in confluence, the better the setup, right? The higher the probability. So we're going to go ahead and find that level I just marked out. And now we're still looking for that previous contrary candle. Now it might not be the same on the M1, M5, M15. The candles might switch, right? But now we're going to mark out this right here, the lowest point possible, and we're on the M5 time frame. Now, why am I marking this candle out right here? Because this is closer to our M1. Now, we're going to go to the M15. Where's the M15 previous contrary candle? The M15 previous contrary candle is right here, because this is that last bullish candle before the move down. So let's go ahead and mark this, right? I'm just going to show you guys this. We're marking the lowest point possible. Remember, you want to mark the lowest point possible when you're marking out levels of supply. And then when you're marking out levels of demand, which I will show you an example of, you're going to be marking the highest point. But notice how this one's a little farther down, actually a good amount farther down. We are still going to mark this and see how this one is farther down, this M15. It's probably not going to be within our stop loss if we were to enter here, but I will talk about that in a minute. Now, see how the previous contrary candle right here on the H1 time frame, the lowest point is right here. That's what we're going to be marking out. So see how easy the strategy is? We're literally looking for the same thing on every single time frame. We're looking for that previous contrary candle, so aka the last bullish candle before the move down for level of supply, and then we're just marking the lowest point and we're labeling it with the time frame that we're on. So right now I'm on the H1 time frame. I'm going to go ahead and mark this with H1. And you do this with every single time frame. I'm not going to spend too much time on it because we'll be here all day. We'll end off on the H4. But now see the last previous contrary candle before the move down on the H4 time frame. So what do? We go ahead, we mark the lowest point, and we label it with H4. Now, this is what I'm going to be showing you guys. So when it comes to entering off a level of supply, level of demand, like I mentioned before, you want as many time frames in confluence, and the more time frames in confluence, the higher the probability is. So I'm going to go ahead and put a short position here because supply we sell from. So let's just say my stop loss is 25, which is normally what it is. I'm going to go ahead and use my template right here, 25, and let's just say we were going for a 1 to 2. So I'm going to go ahead and put this at a 1 to 2 right here. Now this right here has 3 time frames in confluence because we have the H4, H1, and M15, right? Now this setup up here, if I were to put my short position, put NQ 2 cons, this has 2 time frames in confluence. So for me, I do not enter off a setup if it has less than 2 time frames in confluence. So if it only has 1 time frame in confluence, I'm not going to enter that. So with this is going to be a higher probability setup than if it only had 1 time frame, because when we have 3 time frames in confluence, this is what can happen. obviously we want the entry off the H4 in this example, right? We want to take our entry off the first level of supply or level of demand, and we want the other levels within our stop loss. So of course we want the trade to go like this, get us in, and then we want it to go straight to profit. That would be amazing if that happened every time. But a lot of times that does happen, sometimes it doesn't. So what would happen if that doesn't happen? Let's say we push past this H4. Where's market going to go? Market's going to go to the next level of supply, which is going to be this H1. Now, hopefully this H1 is going to be the level that pushes us down and sends us to profit. But let's just say it's not. Let's say we go to this M15, and that M15 is the one that gives us the move down, and then we finally go into profit. See how each time frame is a level of supply, so that just gives us an opportunity for price to reverse and go our way. So this is that 3 time frames in confluence setup, right? Let's just say I had a short position here, and I put this to our normal stop loss, and let's just say I had 1 time frame in confluence. If I had 1 time frame in confluence and we pushed past that level, what's going to happen? Price is going to want to look for that next level of supply in this example, so we're just going to push past it and continue to go up to stop loss because there's no level of supply that's possibly going to give us the push and go back into profit. Compared to if we had another level here, let's say we had a M1, let's say we have a H1, and then let's just say we have a daily, right? Now we have 4 time frames in confluence, so if it pushes past our first level, we can see it go to the M1, the H1, the daily, the second, third, fourth level, whatever it may be, and one of those levels might give us the rejection to go lower, which could send us to profit. So just see how more time frames in confluence, you're having more probability for price to actually have something to reverse off of and go your way. So this is exactly how you would market. It's that simple. So just a quick little recap. We look for the previous contrary candle, we mark it out with a line, and we have the tag corresponding the time frame we're on. And if we have 2 or more time frames in confluence, we'll most likely take that setup if price action's looking good, we have no red folder news, stuff like that, right? But the more time frames in confluence, the better. So this would be a better setup than this right here because we have another time frame in confluence. And just a little thing for me personally, the M15 time frame is my favorite time frame to enter off of. But in this example right here, the H4 is a time frame I would be looking to enter off of. For demand, I'm going to go ahead and use this as an example. This is pretty much right where we're at in the market. But remember, for demand, you're going to be marking the highest point of the candle now. And you're looking for that previous contrary candle to the push up. So for supply, we were looking for the last bullish candle before the move down. For demand, we're looking for that last bearish candle before the move up. So we can see it's right here. Now, we're on the M1 time frame. We're going to go ahead and mark the very highest point of the candle. And make sure these are very accurate. They might be a little off while I'm showing you guys, but you want to double check and make sure it is as accurate as possible. So this would be our M1 level of demand. Let's go to the M5. This would be our M5 level of demand as of right now, right? You can also mark this. What we're going to do is I'm going to mark both because we're probably not going to have many time frames in confluence with this setup. This might even be our last one here. We're going to mark M5 here, and then we're going to mark M5 right here. Remember, make these as accurate as you can. Let's go to the M15. Now look, we're right above this level right here. I'm not even going to mark this as the M15. I'm going to drop down and mark this candle as our M15 because we already had that previous contrary candle that formed. We had the push. Now we would be waiting for the pullback into it. So we're going to go ahead and mark M15. And then let's go to the H1. There's no H1, and then there's probably going to be nothing on the H4 because now we're just getting to the higher time frame. So let's check this out real quick. So this would be our levels right here, right? Now we would be looking to go long. So let's just do this. Let's set this at 2 cons. And look at this right here. If we were looking to enter off the M1, this would only have 1 other time frames in confluence. So it would have 2 time frames in confluence. And if we were to enter off the M15, we would have another time frame in confluence as well. So both of these would only have 2 time frames in confluence. Now, if it was me personally, I would be entering off the M15 because like I just mentioned not too long ago, for some reason the M15 time frame is just my favorite time frame to enter off of. Now this was just one example right here, but I am going to show you guys a better example real quick. I'm just going to use this candle right here for an example. So we're on the H1 time frame. We're going to work our way and bounce between our time frames. So we already spotted that previous contrary candle. So we're going to mark H1. Let's go to the H4, just see what's right there. Here's our H4. So we're going to go ahead and mark the H4 out. Now it's not going to be as confusing when this is current market time because you won't have all this stuff to the right, but it is a little maybe confusing right now because the lines are getting in the way of other stuff. But I'm just showing you guys this stuff as an example. So H1, H4. Now let's just start dropping down to the lower time frames because like I said, I'm not going to mark out every single time frame right now because we'll be caught up doing that a lot, but that's what I want you guys to do. Now look how good this is. This looks very clean. So what are we going to do? We're going to mark that previous contrary candle. We're marking the highest point because we are marking demand. So now we have the M15 right there. All right, my chart did not go back far enough, but this is an example of 3 time frames in confluence with a level of demand. Now I'm going to go ahead, do this, do my 25 points because that's what I use. And look at this, we have 3 time frames in confluence. So once again, we want the entry to be clean off that first level, aka our entry, but that doesn't always happen. So now we have the M15 and we have the H4 for it to possibly bounce off of and give us the move to the upside. So think of every single level of supply or level of demand that's within your stop loss as just that extra confirmation of, okay, this is a spot where the market likes to bounce from, and this is what could possibly bring me to profit. So obviously, if we just have one time frame, it's not going to be as high of a probability compared to if we have 4 time frames. The more time frames in confluence, the better. I'm just making this as simple as I can, and if you guys want more information, you can click the link in the description or link in the bio like I mentioned and join the Discord. So this would be a good setup right here. Now I'm going to show you guys another example of a level of demand. So I'm going to use this previous contrary candle as the example. So we're on the M5 time frame. I'm going to go ahead and mark out M5, and remember we're marking the highest point. I'm being very repetitive with what I say because I want you guys to understand this. Let's go to the M1 time frame. Let's just follow this over. And we are going to mark this candle right here, which is our M1 previous contrary candle. But see how close it is? We are going to mark M1 like this. Instead of marking a whole new line, which you can do that if you want, if it's too much of a difference, you're just going to put a dash and you're going to put M1. It's as simple as doing that. And now you can see these are in confluence. So that's 2 time frames in confluence. Now we're on the M15. So we're going to go ahead and mark that previous contrary candle again. We're going to mark the very top, put M15. And this is what I'm going to show you guys for now. I'm going to put the buy limit right here. I'm going to put 25. Now let me drop back to the M5. Right after we created this previous contrary candle, the market came up, came back down, which we're looking for that pullback into that level of demand. That's how we're going to get our entry. And you can see we pulled right back into that level. Then we pushed up, and this would have gave us a 1 to 2. Honestly, even a 1 to 3 almost. Yeah, 1 to 3 would have just gave us a 1 to 3. You can see we would have taken a little bit of drawdown, but not too bad. The trade did not go to stop loss, so that's a W, right? Obviously, a lot of these setups, they don't take that much drawdown. I'm not going to lie to you. A lot of these setups are very, very accurate. And you could just see that from watching me live trade. They're very accurate entries. But we would have taken some drawdown in this case. But you could see this would have been a W trade. And this would have had 3 time frames in confluence. Now, I definitely would have liked a time frame down here. Maybe like a level of demand right down here. But this is what worked. And you can see this is what would have given us a 1 to 2, 1 to 3, wherever you would have taken profit. Okay, so we went over for supply. You're going to mark the last bullish candle before the move down. For demand, you're marking the last bearish candle before the move up. I've said that plenty of times. That should be drilled into your head, and you should know what you're looking for. More time frames in confluence. the better, which is a higher probability setup. So more time frames in Confluence, higher probability setup. I want you guys to realize that. The more time frames in Confluence, the higher the probability the setup is. I'm going to drill that into your head as well. Multiple time frames, basically what I've been showing you, multiple time frames in Confluence is just your levels of supply, levels of demand, like an M1, M5, M15 within your stop loss. That is multiple time frames in Confluence. That's 3 time frames in Confluence. So you should understand that by now. Supply, sell, demand, buy, very simple. And the strategy is supply and demand. And you guys have to know by now, previous contrary candle is exactly the candle you're looking for, and that's where you mark your level of supply and level of demand. Which leads one more thing to talk about, and that is previous session highs and lows. Now, if you have a previous session high and low in Confluence with your levels of supply and levels of demand, that does up the probability as well. Now, I'm going to go ahead and show you guys the previous session highs and lows, and then I will go ahead and show you guys what I use for these previous session highs and lows, and then I will show you guys the template and how to make that. So for previous session highs and lows, you can see I have this marked out. I have Asian session, London session, and the yellow is New York session. So first things first, I'm just going to show you guys how that pops up on my screen. I use Sonar Labs sessions on TradingView. Right? So you can see we have Asian session, London session. These are the times, New York session, that stuff, right? And you can change the colors. You can do whatever. You don't really need Asian session. I'm going to keep it on because I normally keep it on, but you are going to only mark out the highest point and the lowest point between London and New York session, okay? So this right here is the highest point between London and New York session. See right here? So what we're going to do is we're going to find that highest point and we are going to mark it with session high. And now see how I have it green. So I know that's my session high. Now we're going to find the lowest point between London and New York session. So look right here. See how London, this is the lowest point, but in New York, the lowest point's over here. I'm marking here. I'm marking the lowest point between both of them. So we're going to go here and we're going to mark the lowest point between them. Now, make sure this is as accurate as you can possibly make it. Like I said, mine might not be the most accurate because I'm just showing you guys, but take the time and make sure it's accurate. Now, what I'm going to show you guys right here is look how accurate. Notice how this was our session low. Market pushed up, came back down, tapped into that session low. Now we bounce from there. That's a sneak little peek of how accurate this can be. Let's go back over here, right? This is our session high because we're looking between London and New York. So we're going to go ahead and we're going to mark the highest point, and I'm just going to mark it with session high. These templates that I made came in clutch. Now I'm going to be marking the lowest point. Now notice how it's right here. So we're going to go ahead and we're going to mark session low right here. Now, as you can see, our session low is marked right here, and we broke past it. When you start breaking past session low after session low, that's how you know we're in a bearish market. It's just another confirmation because you should know just by reading price action we're bearish or bullish. But when you see we're breaking past those session lows just like nothing, that's just another confirmation and a visual on your screen that we are bearish. Now, that session high did not get hit right here. Let's go ahead and let's go mark this session high and this session low, and then we'll just wrap it up with the session highs and lows there. So we have session high, we're going to mark it there, and here's our session low. But remember, we're marking the lowest point between London and New York, so we would not mark this one, we would mark this one. Let's follow it over. Would you look at this? This session high right here got tapped into, and look how clean of a rejection we got off that previous session high. And then we have this session low that we had a great bounce off of. So these session lows, like I mentioned earlier, great visual for you to just get that extra confirmation and see that, okay, we're breaking past these session lows. We're obviously bearish, but I know that by reading price action as well. We're pushing past session highs. I can see that we're clearly bullish. Now, when you have these session highs and session lows in confluence with your levels of supply and levels of demand, it's going to make it even higher probability. But like I said, I go more in depth with my live trading every single day. So if you want more information, go there. Now I'm going to show you guys how to make the templates. All you're going to do is you're going to go to horizontal ray. Now yours is probably just going to look like a straight line, right? not dash like mine. You're going to double click it, and you're going to want to change the style of your text to whatever, right? So you can see for my demands and my supply levels, I just have my lines black and I have the lettering black as well. For demand and supply, you can have two separate line colors, whatever works for you. This is all customizable to your liking. For me though, you can see I have dashed lines and I have them black for supply and demand levels. Now for session lows, you know that I have the red line and I have the red text that says session low. So you would go here, you would put session low, and then boom. For session highs, I have it green and I still have it dashed. So you're going to have the dash line here. And then I have the session high. I just go ahead and put it just like that. And it appears right here, right? So see how that line's red? If I wanted session low, I would put session low. I would go to template, save as, and then my template would be saved as session low. And you can see I already have one saved, so I'm not going to save this one. And then you're going to see it pop up when you click the line. You click this button right here that says templates. You will see session low. Now you're going to do that for everything. You're going to do the horizontal ray. You're going to double click it. If I'm making an M5 demand, I'm going to put M5. And if I want it dashed, I'm going to have it dashed. If I want it straight, I'm going to have it straight. If I want it dotted, I'm going to have it dotted just like that, right? You can do it however you like, but this is how you make it. You don't need to do anything with the coordinates. You don't need to do anything with visibility. All you need to do is style, text, and then make sure you save as, and then put whatever it is there. That might have been a lot of information. I tried to make it as simple as I can. Trading takes time, right? It did not come overnight for me to be making $10,000 in a month and becoming consistently profitable. Like I said, it took 2+ years just for me to actually start making money in the markets. So if you guys are actually serious about trading, you want to learn more, make sure you click the link in the description or click the link in my bio, and you could join the Discord and watch me live trade Monday through Friday and have access to the weekend educational calls on Saturday. And then on Sunday, I do a market review. I'm active with the team always because I'm trying to build self-sufficient traders. So if you guys want to take trading serious and you want to learn more, make sure you click those links. And I hope you guys enjoyed the video. Make sure you leave a like, comment, and subscribe. And I'll see you guys in the next video. Peace out.